Federal Bank Ltd business momentum remains strong, with stock analysis and target price. Federal Bank posted healthy growth in advances in Q3 FY 2023, aided by solid growth at the system level. Traction in deposits was also encouraging, mainly through term deposits, given the stiff competition among banks to garner incremental deposits. However, CASA growth was below par, which led to a decline in the CASA ratio to 34.2% vs 36.4%. Certificate of deposit grew by 110% year-on-year, while interbank deposits grew by 43% year. CD ratio for the bank declined by approximately 180 bps per second, coke to 84.9% vs 86.7% in Q2 FY 2023 due to higher sequential growth in term deposits and other wholesale deposits vs advances. Strong liability franchise likely to support healthy loan growth. The bank is targeting a 20% growth in loan books for FY 2023. Loan growth is expected to be broad-based across retail, agri, SME, and corporate segments. CASA and retail TD, less than 2 crore rupees, constitute 94% of total deposits. Overall deposits growth has started picking up, mainly driven by term deposits and other wholesale deposits. However, CASA growth is still below par at 7.2% YOY. The bank aims to strengthen its CASA share by leveraging fintech partnerships and improving the government's business. The bank also has a strong NRI franchise, which enables the bank to build low-cost CASA. The bank is actively engaging in partnerships with neobanks, Epifi and Jupiter, which should help the bank to garner incremental deposits. The bank has guided that it expects these partnerships to contribute 25% to total deposit acquisitions during FY 2023. The asset quality outlook remains stable. NPL ratios for the bank have improved to multi-year low levels. GNPL and NNPL ratios are at 2.5% and 0.8% respectively. The provision coverage ratio is at 69%. The slippage ratio stood at 1.3%, annualized calculated as a percentage of 12M trailing loans, for H1 FY 2023. This run rate is in line with management's guidance. Slippages in the corporate segment have been negligible in the past few quarters. The bank has been building its loan mix towards higher rated corporates and secured retail loans over the past years. However, the restructured book stands higher compared to peers at 2.4% of loans. The bank has 20% coverage on the restructured book. Federal Bank Ltd stock recommendation. At the CMP, the stock currently trades at 1.3x, 1.2x, 1.0x its FY 2023E, FY 2024E, FY 2025 EBV. Factors such as a focus to build better digital capabilities, sustaining a healthy loan growth outlook. Stable asset quality with the higher rated corporate book, and continued focus to increase its retail mix with high yielding businesses such as commercial vehicles, credit cards, and microcredit are expected to augur well for the bank's growth going ahead. Asset quality should remain stable due to the benign credit cycle. Focus on growing assets and liabilities in a granular manner and an improved return ratio augur well for the bank going ahead. We believe now consistent steady performance could drive re-rating in the stock. Potential value unlocking in FedFina, NBFC subsidiary, where an IPO could be an additional catalyst for the stock. Federal Bank Ltd stock target price. We have a buy recommendation on the Federal Bank Ltd stock with a target price of 165 rupees, CMP 136. Key risks. Economic slowdown leading to slower loan growth and higher than anticipated credit cost.